Welcome back to the Dividend Diplomat YouTube channel. You got your voice here, Lanny and Bert, the Dividend Diplomat. We're going to talk to you today. We found a stock that could possibly be a hidden gem dividend growth stock. We found a stock that's yielding 3.4%, that has an insane 5-year dividend growth rate. That's well over 5%, well over 10%, over 20%. This 5-year dividend growth rate is 35%, according to Seeking Alpha. Is this a hidden gem? Is this a stock to buy right now? Are we going to be scooping up this company? Watch this video and find out.
Smash that subscribe button, guys. Give us a thumbs up as Bert has found a high-flying, boring dividend growth stock. Bert, is this a stock to buy right now, or is this a stock to watch? Let's find out.
Yeah, so what are we going to do today? We're going to talk about this company. We're going to talk about some historical financials over the last 5 years. We're going to talk about some interesting things that happened to their dividend over the last 5 years. We're going to talk about their recent earnings, which just came out earlier in the month. Then we're going to run them through the Dividend Diplomat's dividend stock screener, which focuses on that price to earnings ratio, payout ratio, that history of increasing dividends, and that bonus metric, the dividend yield. Lanny, this company has been around forever, and I guarantee you, this company that was founded in 1886 has touched our lives in one way or another.
Almost 140 years of producing products, guys.
And good products for you too. You can feel good about this company because they produce vegetables. They produce and sell bananas. Who are we talking about? Fresh Del Monte Produce, ticker symbol FDP. Lanny, were you at least surprised to be talking about them today?
Very much surprised, considering they're a 1.4 billion in market cap company. I don't typically buy really any of their products. Maybe there's some off-branded support that they give to some store brands. I'm not sure. But they produce over 4 billion in revenue. They've been around for 140 years. Let's find out what they're all about.
Yeah, canned fruit, canned vegetables, canned peaches. You got some of their bananas here. The one I buy, Lanny, is when I don't need a quart of like the chicken broth or the beef broth, and you don't want to just use like 1 cup and dump it out. You get the College Inn beef broth or the College Inn. That's the one that would be the one product that really touches me for this household. All right. So what is going on with Fresh Del Monte? Why did they pop up here on our screener? They are having a very an interesting 2024 to say the least. They're only up 6.99%. So they're trailing the S&P 500 this year. Over the last year, they're up 14%. Last 5 years, they're only up 2.53%. Why? Because there has been some noise of what's been going on with the company. They've had to turn things around a little bit, and it kind of pops up here in the historical financials. So let's go through them. Revenue in 2019 was 4.4 billion. 2023, 4.3 billion. So they've really flatlined their revenue growth, Lanny. Net income was only 66 million in 2019. 2023, negative. They had a net loss at 11 billion. Gross margin has kind of been stagnant a little bit. They've squeezed.
They didn't lose 11 billion, right?
No, a million. I think I said million. So all right. Yeah, oh God, no. They would. I don't know if Fresh Del Monte would be a company if they lost 11 billion. Wipe out that market cap very fast. Gross margin, they've been able to squeeze a little bit more out of the expensive. Gross margin in 2019 was 6.83%. Now it's 8.81%. But Lanny, the biggest movement is what's going on with their debt. That's been the piece that's been the interesting thing with Fresh Del Monte's debt. We'll come back to this, but they had 752 million total debt, 616 million in long-term debt in 2019. They've been paying it down. Total debt at the end of last year was 598 million. Long-term debt was 400 million at the end of last fiscal year.
Yeah, they're trying to get fiscally responsible here, and they're setting themselves up to have better cash flow, hopefully better earnings, lower interest expense, and in a down rate environment. So this will be pretty interesting here. But the ticker symbol is FDP, man. I mean, this stock's been up 7% this year. It's been up 14% since last year. 5-year track record on this stock that was only up 2.5% here. So what's the story here on the stock for FDP?
It's the debt, and that's what got them into some trouble here. As you see in 2019, that debt was very high. It had spiked up to that point too. They actually had to pause the dividend. They had to suspend the dividend in 2019 due to some issues with their credit facility because debt had gotten so high. They brought it back pretty closely. But if you look here, I'm going to put up from Seeking Alpha that 10-year dividend chart. it was pretty stagnant, but you see a big pause, 2019, popped it up. They were building it back. COVID happened, bring it back down again. They have been growing that dividend aggressively though since COVID landing. They're back. They've been doing it for 3 years. That 5 year dividend growth rate is 35% because it's gone up so much from where it was 5 years ago due to them suspending it. So you can't say that even though they're a company that they've been founded for 140 years, that they have the best dividend history because they got themselves into debt trouble. They got themselves into some issues. They had to suspend it. They had to cut it. But from a recent dividend growth stock, they are back and they are trying as hard as they can to clean that balance sheet up, pay down that debt, and keep growing that dividend.
Oh man, Eric
Yeah.
Bischoff here, guys. I mean,
Yeah.
so 3 years, payout ratio is 43%. 3 years of growing dividends, though, at 35%. FDP, I mean, Del Monte, the collagen. Let us know if you guys use their brands frequently throughout your weeks.
Mm.
I don't know, Bert. I mean, FDP seems like they got still a lot of getting their act together to do.
That's exactly right. When they came out to that recent earnings, net sales were once again down. They were only 1.14 billion compared to 1.8 billion in the last year. So it's coming down from the comparable period. Gross profit down, Lanny, 113 million compared to 117. Gross margin, though, this was the one that was interesting. Gross margin was 9.9%. And if you remember earlier, I kept saying from 2019, it was 6.83%. So the gross margin's increasing. They're still continuing to get more. Maybe they're doing some shrinkflation here in their cans. They're taking a few ounces out of the cans there, keep the cost of goods down while keeping the price high. Income, they had 54 million. We'll know, but last year they showed a gap loss. So something's going amiss where there's going to be a quarter where they probably take it. I think the big one here, Landy, can you tell them what happened here on that long-term debt, though? I think that's the one
Yeah, it
shining
still
light.
still goes way down. It's down to 285 million from the 400 million at 2023's year end. So they're crushing down their debt, trying to get out of being handcuffed by debt. Because when you think about, take a step back, they're 1.4 billion. At the end of 2023, they had 400 million in debt.
Yeah.
So, and if you actually just look at what their equity was at the end of the quarter in June, they had 1.9 billion in equity. So their debt to equity now is vastly improved,
Mm-hmm.
because you never want to see too tight if you can help it,
Yeah.
from that standpoint. So
Yeah, that's a great point. You're right. And when you're dealing with a market cap company that's only 1.42 billion, you want to see that they're cleaning it up, that they're not going to get themselves into some debt trouble, because that's where you can get tripped up as a smaller company when you have an oversized balance sheet. And it tripped up Fresh Del Monte 5 years ago. And it looks like they have learned from that lesson. They are not overstretched on debt. They're fixing it up, they're cleaning that up, which should hopefully help keep propelling this company going forward, allow them to reinvest in the business, cut down those expenses, or even Lanny, make themselves a very appealing acquisition target for somebody that's looking for a strong
sure,
consumer staple.
bring on Smuckers or something.
Yeah.
But yeah, I mean, current ratio is almost 2x, quick ratio is about 1. So
Yeah.
pretty good balance sheet at this point going forward. So I do expect strong results to finish off the second half of 2024. And I think 2025 should be a great year for Fresh Del Monte.
Yeah. Are they a hidden gem? Are we buying them with a PE ratio of 13, that payout ratio of 42%, that short-term dividend growth because they had to cut it back so far? Not running to buy Fresh Del Monte, to be honest with you. I'd like to see another quarter or two of results. I'd like to see some progress on that top line. Who really knows what's going to happen? Are they going to continue to be able to pay down that debt? But am I definitely watching them? Yeah, absolutely. Really like what they're doing with this balance sheet. I really like how they are cleaning it up. They're doing what they need to do to thrive in 2025.
Guys, let us know what you think of Fresh Del Monte, FDP stock. What other stocks are you buying here in this all-time high stock market, guys? Like this video, subscribe to our dividend investing channel, guys.
And remember, you're either with us or you're against us, Jack.
Bert, the Herd, and Lanny from the Dividend Diplomats, over and out.